So many stocks out of these now. How do I select which one to build position? I'm
You can
repeating the
do it
same
two
question.
ways.
Yeah.
Well, if you have the oscillator that I use, I could have 10 stocks on my screen. And if that oscillator crosses higher, then that's the stock that I'm going to buy.
Okay. Okay. That's interesting. So let's figure out the one which you would like to buy out of these 15.
Now, I will tell you this is a signal that's very close to what my oscillator is the 8-day and the 20-day.
Okay.
So what we'll do just for a second, and we'll just have a little bit of fun with this. We'll go to that, and we'll go to 8, and we'll go to there, and then we'll go to this. Oh. So this will be the closest. This is not my signal, but it's very, very close to what my signal is. And so we'll use this for the example. So the buy signal would be any time that the 8 crosses the 20-day. So that would be the purple and the blue line. So
Okay.
here.
Okay.
So you get the idea. So on CIPLA, it would have crossed higher here. So what I'll do, if I've got, let's say, these 15 stocks on my screen,
Yeah,
is I run that signal at the close, and it says, here's all the stocks where, let's say it's the 8 and the 20-day moving average, and then that tells me which stock to buy.
okay, got it. Fair enough. And your exit strategy still remains the same. Your stop loss will be around 5 to 10%. And how do you take profit?
Generally 10 to 12%. So it depends. In a market like this, I'll take profit generally at a fixed time frame. So in a normal market, I scale profits at 15 to 20%. So normally what I'll do is when I have a stock that goes up 20%, I sell 20 to 25% of the stock. I've already moved up my stop loss along the way. And that's in a normal market, that's how I'll do it. In this market, I've been taking gains at 5%, at 10%, at 15%. So because this market moves so fast that you could have a 10% gain today and a 0% gain in 2 days. So I've been scaling much quicker. Also, when my oscillator turns down, I'll either close the position or at least book some profits along the way.
Okay. So you need to be very, very dynamic in today's market, in this environment.
I believe so. It's just because these moves right now happen so fast that what I did was, when the volatility started, I was following my same system. But then what would happen is I'd have a stock that was up 10% or 12% today, and I'd wait for my 20%, and then 2 days later, it was back down to break even. So there are some markets, I think, that you can wait for the home runs, and there's some markets that I think you have to take the singles and the doubles. And this has been a market right now for singles and doubles.
Okay, fair point. I mean, there's a strong analogy with cricket as well. When the pitch is like that, you better take singles and doubles. Don't try to hit 4s and 6s all the time.
Right. And because even when you look at the strongest stocks, like these energy stocks, and we'll just go back here just for a second, then we'll come back to the nifty stocks. So I was in Devon Energy. So I made, off the top of my head, I made over 100% in this trade. But because I got into it last year right? And it just started to work and I took some gains out along the way. But then if you take a look, I mean, they took these oil stocks, this was very steady eddy, and then straight down, big bounce higher, another, what is that, 18, 20% or 25% drop. So that's why I've had to take gains quicker, just because it's so volatile.
Got it.